Very happy New Year to each one of you. Sorry, please bear with me for the mask. Not well, so I didn't want to remove that. And today, this study circle meeting is on the Vivad Vishwas scheme, which is on under the Income Tax Act. We have Advocate Tanmayee Rajkumar with us to take us through this. I request our chairman, Pramoda Reddy, to escort her to the dais and greet her with the floral bouquet. Tanmayee, warm welcome to you. I request Chairman to give us welcome address.
Good evening, members. Well, glad to see you after a long time. I was on code of conduct for the last 3-4 months, and it's glad that we will be interacting frequently now, at least for the next month, till the new leadership team takes over and the diocese change. Firstly, I think the date, if you've seen today, was 1st, and many were asking me that you put this program on 1st. The last date of application was 30th. So I think I have very much high hopes on the government that they would be changing the date and give this extension. And secondly, it was very important for us as an opportunity and also as a guiding factor to understand the nuances. Probably when this was introduced earlier and today, there were quite a lot of changes which has happened. Be it Supreme Court judgments and the decisions which have been given, awarded so far, has probably taken it more interesting. And of course, I thought other than Tanmayee, who else can be the speaker for this session, because lawyers day in and day out, they know what is the legality, what are the decisions which is going forward, and how do we take it and how do we find this back. So with this intention, today's program was launched, and I think our professional colleagues will get a month more to probably look into this and see what way we can guide our clients better. So with this brief introduction, I would like to welcome you all and happy learning. Thank you once again. I request our secretary to do a brief introduction of this team.
Thank you, Chairman. A quick introduction of Tanmayee Rajkumar. She is a partner in King & Patronage Advocates Bangalore, and she heads the firm's tax practice. She started her practice in 2010 after completing her law, and she primarily focuses on direct taxes and handles large corporates in tax appellate tribunal and high court matters. She also spends part of her day on the civil litigations and publishes articles, legal articles as well. Apart from that, she is a passionate reader and keenly follows Indian classical music. It's an honor to have Tanmayee with us. Thank you, Tanmayee, for being here, and over to you for the session.
And Vishwas is trust. So obviously this is sort of a confidence building measure that the government has come up with. Essentially, the long and short of it is, if you have some appeals pending and you want to pay some tax, the government is offering waiver of a certain portion of the interest and penalty. This is the long and short of it. We'll go into the details of the scheme. But first, we look at the rationale. Why was this introduced? So we all know that there was one VSV scheme that came out in 2020, which was introduced as an act. This time in 2024, the VSV scheme has been introduced as part of the Finance Act of 2024, but back then it was an act in itself. And that scheme saw a lot of success. If we do a data analysis, I am given to understand that in the 2020 VSV scheme, about 99,000 crores worth of disputed tax was settled. And the government made about 75,000 crores into its kitty, got that much of money into its kitty. So obviously it was a very successful scheme, and at the same time it also reduced litigation for the government. So one thing that we must remember is, when the government is fighting tax litigation with the assessees, it is also incurring cost. So this is is a good way of saving costs for the government and at the same time keeping assessees happy. So there's a lot, we all know that there's a lot of pendency of appeals at the first appellate authority stage, at least CIT appeals we all know faceless, nothing is moving. And there is more and more filings today, be it at the DRP level, ITAT level, high courts, pendency has gone up a lot. And this is one of the ways to reduce litigation with minimal cost to the government. That is the obvious rationale. And like I was saying, generating timely and substantial revenues to the government, like I was saying, about 99,000 crores of disputed taxes were settled and the government got 75,000 crores. So this also generates substantial revenues. And most importantly, provides certainty and peace of mind and savings to taxpayers. So most of us are not really, most of the assessees are not really bothered about the money involved itself, but they feel that the sword hanging on their head is a bigger difficulty to deal with. So this provides certainty and an end to everything, because the scheme, as we go along, we will see that the scheme says that once you settle under the scheme, everything is closed. You can't have reopenings and you don't have reassessments, you can't have revisions. The same. So it provides certainty, and of course, with the government's intent to bring in more investment and please the investors, this is one of the ways that the government has come up with. Now we'll briefly get into the scheme itself. Like I was saying, this scheme is part of the Finance Act 2024. It finds its place in Chapter 4 of Finance Act number 2 of 2024. There are 12 sections that fall under this chapter. So Section 88 is of course a very brief, basically says that is a Vivad Vishwas scheme. But we'll start with 89, which is basically who is an appellant, because who can opt for the scheme is one who falls within the definition of this appellant. So appellant means a person in whose case appeals are pending before the CIT appeals, ITAT, High Court or Supreme Court as on the specified date. A specified date is important. It is 22nd of July 2024. If you all recall, the budget came out on 23rd July. So 22nd July is the specified date. So your appeal before any of the appellate authorities has to be pending as on that day. Special leave petitions before the Supreme Court, writ petitions before the Supreme Court and High Court are also considered as valid appeals pending, and so you qualify as an appellant if your petitions are pending. Then, objections pending before the dispute resolution panel under 144C of the Act as on the specified date, and pursuant to the directions of the DRP, no final assessment order has been passed by the assessing officer as on the specified date. Both are eligible appellants. So where there is a draft assessment order passed, an assessee has filed objections before the DRP, that is still pending adjudication, eligible assessee. If objections have been disposed of by the DRP, but final assessment order is yet to be passed because they get 30 days from the end of the month. So you are in that bracket, you are still entitled. We'll see how the taxes, the disputed taxes and all are worked out later, but this is an eligible appellant. Application for revision under 264 is pending is also an eligible appellant. Now one thing which of course we will look at later when we deal with the comparison between the 2020 VSP and the 2024 VSP. In 2020 VSP, where there was an order but the appeal time had not expired, that assessee was also an eligible assessee. But this is a very different move from the government where they are excluding that set of assessees from the scheme of VSP. So essentially, if you don't have an appeal pending as of 22nd July, you are not an eligible appellant. Even though your appeal period has not expired. Let's say an assessment order was passed on 1st July of 2024. Your time limit to file an appeal has not expired, but you will not get the benefit of VSP. That's the major difference between the 2020 VSP and the 2024 VSP. Who cannot opt? Where the tax arrears relate to an assessment year in respect of which there is an assessment or reassessment on the basis of search. 153A, 153C, your 147s, all of those, you are not entitled to go under the VSV scheme. Now under the earlier VSV scheme, if it was a search case where the tax demand was under 5 crores, so small search cases, let's say, they were entitled. But in this new VSV, search cases, you cannot opt under the scheme. That is one. Then, where the tax arrears relates to an assessment year in respect of which prosecution has been instituted on or before the date of filing the declaration. So, suppose there is a prosecution pending already that has to be initiated. It is not just prosecution notice issue, not just a sanction issue. A complaint has to be filed before the magistrate. That's when the proceedings are initiated. That is already initiated, then you are not eligible to go under the VSV scheme. Then you have where the tax arrears relate to undisclosed income from a source located outside India or undisclosed assets located outside India. You are not, if the tax arrears are relating to undisclosed assets outside India, you are not an eligible assessee. Then where the tax arrears relate to an assessment or reassessment made on the basis of information received under section 90 or 90A of the Act. So section 90 is basically your DDA provisions. You have the provision of exchange of information under the DDA. So if the specified authority has written to the competent authority in the other country for exchange of information, and on the basis of that information there is a demand that has been raised, then you are not entitled to go under VSV. But suppose there is an exchange of information that has happened, but that information has not been used to make any addition, then there is no bar. So the wording is very clear. Where the tax arrears relate to an assessment or reassessment made on the basis of information received under section 90. So it's where you have an assessment that has been made on the basis of the information. Then any person where there are orders of detention, prosecution under provisions of some other acts like your Coffee Posa, your Benami property, NDPS, BNS. So in those cases, the person becomes ineligible to opt for the VSV scheme. Now let's just notice the words that I have highlighted in bold. Now the first two are assessment year specific. So if there is at least a bare reading of this will indicate that if in respect of the assessment year concerned, there is a prosecution, although the prosecution may be unrelated to your issues in the order, you may become an ineligible assessor. We will go to the FAQs later and the court decisions later, where they have interpreted this to essentially mean that if the prosecution is unrelated to your dispute that you want to close under VSV, that will not be a bar as the interpretation, but a bare reading of the provision seems to indicate that if for that assessment year you have a prosecution, let's say you have a prosecution for TDS default, but you want to close your 143.3 assessment where there is no issue on tax deduction, it looks prima facie that it will be a bar. So the first two are assessment year specific. The next two are income specific. So where the income is on account of undisclosed assets or undisclosed income, or it is made on the basis of information, exchange of information. That kind of income you are not eligible to go under the VSV scheme. The third is person specific. So if the assessee concerned has any prosecution pending, it will obviously be very unconnected. If you have a prosecution going under the NDPS Act, obviously it's unconnected to your income tax proceedings, but there is a bar. So it is assessee, it's connected to the assessee concern. Now this is the main part. What are the waivers? What are the payments that I have to make? So the Act has bifurcated the appellants into two kinds. One is a new appellant, the other is the old appellant. So a new appellant is where essentially the appeal is filed after 31st of Jan 2020, which was the specified date in the old VSV scheme. New appellant is one who has filed the appeal after, old appellant is one who has filed the appeal before that date. So essentially they are saying if you are an old appellant and you had a chance to go under the old VSV scheme and you didn't go, the payments are higher. If you are a new appellant, the payments are as per this slide. So we'll first look at what happens in the case of a new applicant who has filed an appeal after 31st of Jan 2020 but before your 22nd July 2024. The nature of tax arrears being if you have disputed tax, consequent interest and penalty, what you have to pay before 31/12/2024 originally, but now that has changed to 31st of Jan 2025. There was a notification that was issued on 30th of December, changing the date to the last date to 31st of Jan 2025. So you pay 100% of the disputed tax if you pay it before 31st of Jan, then your entire interest and penalty gets paid. If you were to make the payment after 1st February 2025, you have to make payment of 110% of the disputed tax and you get waiver of the balance. Then we come to what happens if it is a case of disputed interest or disputed penalty alone. Because there are cases where you don't have a quantum appeal, you only have an appeal pending on interest or penalty. In those cases, what they are saying is if you make the payment prior to 31st of Jan 2025, you have to make payment of 25% of the disputed interest or disputed penalty and you get waiver of the balance. And if you make that payment after 1st February 2025, you have to make 30% payment as against 25%. So this is the scheme as far as new appellants are concerned. Now as far as old appellants are concerned, one thing we have to remember is an old appellant is one who had filed an appeal on or before 31st of Jan 2020 and the appeal is at the same appellate forum in respect of such tax arrears. So let's say the appeal was filed prior to 31/1/2020 before the Commissioner appeals. If it is still pending before the Commissioner appeals even as of today, then you become an old appellant. But if the Commissioner appeal has disposed of your appeal and you have filed a new appeal to the tribunal after 31st Jan 2020, you become a new appellant. Basically the idea is, did you exhaust your chance when you had it in Jan 2020? If your appeal was at the same stage and you didn't choose to go for the scheme at that point of time, the payments are high. This is the scheme of things. In the case of old appellant, what happens? If the nature of the tax arrears is disputed tax, we'll come to the definition of what is disputed tax, disputed interest and all that. But generally understanding disputed tax, where the tax arrears is disputed tax, interest and penalty. What you have to pay in the case of an old appellant is 110% of the disputed tax if you are paying it before 31st of Jan 2025 and it moves to 120% if you are paying it after 1st February 2025. So a slight, it's basically a premium. They are saying that if you didn't avail your chance earlier, you pay a premium, you will still be entitled to the waiver of the balance. Similarly, if it is disputed interest or penalty or fee alone, then you pay 30% instead of 25% if you are a new appellant, you pay 30% here if you are paying it before 31st of Jan and you pay 35% if it is after 31st of Jan and the balance obviously gets paid. Now in certain cases, the scheme says you have to pay only 1/2 of the disputed tax or penalty or whatever it is and you will get the balance waived. One such thing is where it is a departmental appeal before the appellate forum. Say you have succeeded before the first appellate authority, department is in appeal before the ITAT, what you have to pay is only 50% of the disputed tax to get everything else paid. Then, where the appeal is filed before the CIT appeals or objections is filed before the DRP on an issue which is covered in the appellant's favor by the decision of the ITAT and such decision is not reversed by the High Court or the Supreme Court, or where an appeal is filed before the ITAT on an issue which is covered in the appellant's favor by the decision of the High Court or the Supreme Court, High Court and such decision not reversed by the Supreme Court. So basically, if in your own case you have a precedent, then it is you are eligible to take that 50% benefit because anyway you are likely to succeed before the next appellate forum where your appeal is pending. That's the rationale for this 50%. Then we move to some important definitions. Appellate forum is very simple. It is Supreme Court, High Court, ITAT, CIT appeals or JCIT appeals. Designated authority is one who is not below the rank of CIT as notified by the Principal Chief Commissioner. Then last date for the scheme is not yet notified, but it says basically that any date that will be notified by the central government. Last date for availing the scheme has not yet been notified. Specified date we discussed is 22nd July 2024. Then tax arrears will be aggregate amount of disputed tax, interest chargeable or charged on the disputed tax, and penalty levied or leviable on the disputed tax. So if it is interest not charged but chargeable but is connected to your quantum, then it falls under your tax arrears definition. It could be a case of disputed interest alone, it could be a case of disputed penalty alone, it could be a case of disputed fee alone, your 234E or F or whatever it is. Then this is important. What is the disputed tax? What is the definition of disputed tax? It will include surcharge and cess, firstly. And how is it computed? Cases where the appeal, writ petition or SLP is pending as on the specified date, the disputed tax will be the amount payable if such an appeal or writ petition were to be decided against such person opting for the scheme. So basically it presumes that the demand as it stands at that point of time will be your disputed tax. So assumption is your SLP or your appeal is going to be dismissed. What is the, if suppose you had won on certain issues before the CIT appeals, you have filed an appeal to the ITAT. What is the disputed tax? The disputed tax will be essentially what your OGE to your CIT appeals which say that will be your disputed tax. Then cases where objection before the DRP is pending as on the specified date, disputed tax will be the amount payable if the DRP were to confirm the variation proposed in the draft order. Same rationale, that it's as if the draft assessment order is confirmed. Cases where DRP has issued directions but the assessing officer has not passed the final assessment order, disputed tax will be the amount payable as per the assessment order to be passed. So you have to do, or the assumption is that you do a calculation of how the demand will look if the DRP's directions are given effect to, and that will be your demand. If DRP has given you relief on certain items, you take those benefits and see where your demand stands. In cases where revision application under 264 is pending, disputed tax will be the amount payable if such application were to be dismissed or rejected essentially, were not to be accepted. Then in the cases of unabsorbed depreciation, unabsorbed loss, your MAD credits under 115 JAA, you have two options. You can either pay the tax on the reduced loss and claim the loss as it was in the return, or you claim the reduced loss by accepting the adjustments made in the assessment order. You claim the reduced loss, and the carry forward years you have to make the adjustments. That we will come to that when we look at the rules, but this is essentially it. Then disputed income is simple, whole or so much of the total income as is relatable to the disputed tax. Disputed interest determined where such interest is not charged or chargeable on the disputed tax and an appeal has been filed in respect of that said interest. Penalty determined where such penalty is not levied or leviable on the disputed tax and an appeal has been filed in respect of the said penalty. So basically what they are saying is, it is not, when you are talking about disputed interest or disputed penalty, it is not something that is related to your tax. It has to be a standalone appeal that pertains only to interest or pertains only to penalty. If in your appeal you have grounds on your demand, tax demand, and you also have consequential grounds on interest and penalty, that will get covered under disputed tax. But if it is an appeal standalone on interest, let's say it's a case of 201(1)(a) interest alone, which you have filed an appeal on, then you fall under disputed interest category. Let's say there is a penalty under 271(AA)(c) or something for non-maintenance books or whatever. That is disputed penalty because that is a standalone penalty order. Then we have the procedure. The procedure is essentially coming out in the rules, but the Act also sort of gives a scheme as to how the entire procedure works. The person opting for the scheme, is called a declarant, has to file a declaration in the prescribed form. The prescribed forms have come out now. Form 1 will be the prescribed form. All these have to be done electronically. He has to also file an undertaking in that form itself, waiving his right to seek or pursue any remedy or any claim in relation to the tax arrears for which he is opting for the scheme. So basically, once you opt for the scheme, you cannot pursue your appeal or any other remedy in respect of those tax arrears. So you have to give an undertaking saying that I am not going to pursue anything further. Then once you file the application, the designated authority has to pass an order determining the amount payable within 15 days from the date of receipt of the declaration, and he has to grant a certificate to that extent. So once you file the application, he does a calculation of what is the tax payable, what is the demand payable, or whatever is the arrears payable, and that has to be done within 15 days. And from there you get 15 days to make the payment. Declarant to make payment of the amount determined in the certificate within 15 days from the receipt of the said certificate and to intimate the authority of the payment. Where the declarant has filed any appeal or writ petition before an appellate forum, the same has to be withdrawn, and you have to give a proof of withdrawal of the appeal. Along with this payment intimation, you also have to give proof of withdrawal of the appeal. Now, one of the questions that clients very often ask us is, I have filed an application for withdrawal, but the order dismissing my appeal as withdrawn has not yet come. So what do we do in those cases? FAQs also clarify that as long as you have filed an application saying I want to withdraw the appeal, that is sufficient. You don't have to wait for the order from the court to come, because courts will take obviously their own time to pass orders. So this proof is sufficient. And once this undertaking and payment is made, the designated authority has to pass an order that basically stating that the amount has been paid and everything stands closed at that stage. So I was saying, all this procedure has essentially come out in the Vivad se Vishwas rules. These rules were notified in September 24, and they contain about 10 rules. They notify about the four forms for each for declaration, undertaking, and then his intimation, etc. 10 rules in the new rules. The old rules had 9 rules. And the one additional rule that has come in 2024 is with respect to amount payable by the declarant. Earlier in the earlier rules, the computation mechanism was not provided in the rules. But this time, they have provided the way to compute your amount payable has come into the rules. Rule 2 is essentially definitions. Dispute is defined, which is in line with what is defined as an appellant. Basically, your appeal has to be pending, or your DRP objections should have come and order is awaited, or your DRP objections are pending. Those are the definition of dispute. Issues covered in favor of the declarant, appeal filed by the revenue, or where the declarant has got a decision in his favor by the appellate authorities, ITAT, High Court or Supreme Court. Because this becomes relevant where we go back to the 50% payment. That is where your issues covered in favor of the declarant become relevant. And old appellant and new appellant, I have already explained what that is. Basically, when was the appeal filed and where is it pending? Is it pending in the same stage as of 31/1/2020 or not? That is essentially your old appellant and new appellant. Now, Rule 3 is what I was saying has really come into in the 2024 rules. Basically says, the declaration filed under section 91, which is what we saw, on or before 31/1/25, the amount payable shall be as mentioned in column 3 specified in 90, and if you have made it after 1/2/25, it is column 4. So essentially we saw that 100, 110, then we saw 30, 35, 25, 30. So basically it provides for that. But what is important is the sub-rule 3. Basically says, if the dispute includes issues covered in favor of the declarant, the disputed tax shall be the amount which bears to the tax payable on all the issues in the dispute, the same proportion as the disputed income in relation to issues covered in favor of declarant, in relation to the issues covered in favor of the declarant, bear to the disputed income in relation to all the issues in the dispute. Essentially, you have to work out a proportion. Let's say 100 is your addition, the overall addition, and 10 is where the issue is covered in your own favor. Now, how do you work out the proportion? Simple. 100, your tax on 100 is 30, let's say 30% tax. What you do is, you do 30 multiplied by 10 over 100. So 1/10 of 30 will be 3. So on the 3 rupees of tax, you are entitled to get a 50% rebate, which means you pay 1.5, and the rest of your tax, that is your 27 rupees, you pay and you get balance of the waiver of the balance. That's essentially what this provides for. Then rules 4 to 7 essentially give the various forms that have been notified. Form 1 is what is there in Rule 4, that is basically your declaration. So the rule says you have to file a declaration in Form 1 for each order. So let's say there is a 147 order for the same year, there is a 143 order for the same year. You can't file one application, you file 2 separate applications. But let's say there are cross appeals by the revenue and the assessee. Then you can file one form. So let's say your appeal is pending before the ITAT, both the revenues and assessees appeals are there. You can file one form and close both the matters in one form. Declaration and the undertaking has to be verified by the person who is competent to verify the return of income under section 140. So this is very important. If a company is doing a BSV, it is important that the declaration has to be done by the managing director, because your return can be only signed by the managing director, or in his absence the director. So this is important. And on receipt of the declaration, he will issue, the designated authority will issue an acknowledgement which is electronically generated. All this has to be done electronically on the e-filing portal. Once you log into the portal and log in with your PAN, there is a log that shows the way to the BSV scheme, and you can do it on the portal. Then Form 2 is basically the certificate that the designated authority issues, saying that this is the amount of tax that you have to pay in order to get the waiver of the balance. That is Form 2. Then Form 3 is your intimation of payment to the designated authority. Once you make the payment within the 15-day timeline, you file a Form 3 online again and say this is the payment I have made, this is the proof of payment, and also attach your proof of withdrawal of the appeal that is pending. Form 4 is basically the order of the designated authority saying that the payment has been made, your BSV application has been accepted, and matter is closed. Rule 8 is not important. It basically says that the DG systems can lay down certain guidelines and come up with procedures to effectuate the scheme. Rule 9 and 10 deal with the manner of computing disputed tax in cases of unabsorbed depreciation or loss or MAT credits. What happens if it is a loss? Let's say you had a loss return of 100 and your loss, there was an addition of 20, so your loss came down to 80. So there are two ways of settling under the scheme. Either you pay tax on the 20 and carry forward your 100, or you say I will carry forward 80. Both are acceptable, but if you say I am carrying forward 80, then in the subsequent years your interest and other issues will have to be accordingly worked out. That's what basically it says. Where dispute is in relation to reduction in loss or unabsorbed depreciation or MAT credit to be carried forward under the Income Tax Act, the assessee has two options. One, to include the tax payable on the amount by which the loss or unabsorbed depreciation or MAT credit is reduced in the disputed tax and carry forward the loss or unabsorbed depreciation by ignoring such amount of reduction in loss or unabsorbed depreciation or MAT credit, or to carry forward the reduced amount of loss or unabsorbed depreciation or MAT credit. Both are acceptable. If assessee exercises option 2, then he shall be liable to pay tax along with interest, if any, as a consequence of carrying forward the reduced amount of loss or unabsorbed depreciation or MAT credit in the subsequent years. That is something that we have to bear in mind. WDV of the block of assets will not undergo any change in the case of unabsorbed depreciation. Computation of reduced income, reduced amount of loss or unabsorbed depreciation to be carried forward in terms of option 2. Half of the amount by which loss or unabsorbed depreciation is reduced to be considered for reduction if such reduction is related to issues covered in favor of the declarant. So the same logic applies if there is that issue is already decided in your favor in an earlier year and you have a precedent. 50% is what you have to consider. That continues even for unabsorbed depreciation and losses. Then the forms, I have already briefly discussed this when we were going through the rules. Form 1 is essentially filing of your declaration electronically. It contains certain, what we have to just bear in mind is it has some specific schedules that have to be filled in. It will ask you for the total amount, the total income, what was the disputed income, what is the undisputed income, what is the tax payable, what is the interest penalty, etc. Then form 2, 3 and 4 we have discussed. So what are the cases when your declaration can get rejected? One is where any material particulars furnished in the declaration is found to be false at any stage. That is, I think, very basic. If the declarant violates any conditions referred to in the scheme, if the declarant acts in a manner which is not in accordance with the undertaking furnished by him. So in all these cases, your proceedings will stand revived. Your application will stand rejected, but your appeal will stand revived. So there is no, ultimately there is no disadvantage to the assessee. But fact remains that you can't avail the scheme. So if say you've given an undertaking saying you are not going to pursue the appeal, you have withdrawn the appeal, but factually there was never an order, dismissing the appeal as withdrawn, and you went ahead and argued that matter, let's say, before the tribunal or high court, then you have violated your undertaking. So in that case, they can say, okay, we are rejecting this application and everything will stand revived. So what are the consequences in case we avail the scheme? First one is, appellate forum cannot proceed to decide any issue relating to the tax arrears once Form 2 is issued. Form 2 is a form that is issued by the authority saying this is the amount of tax that you have to pay. Remember that at that point of time you may still not have withdrawn the appeal, because your question of withdrawing the appeal comes only when you make the payment and you have to intimate the authority that I have withdrawn the appeal and I made the payment. So in this interregnum, the appellate authority can't decide the issue. So one thing that we have to remember is, once we've got a Form 2, it is always advisable to inform the appellate authority that we've received the Form 2, we are in the process of completing the entire procedure, so please don't decide the appeal. That's something that we have to bear in mind. Matters covered under VSV cannot be reopened in any other proceedings under the Act or any other law. So if once I have closed this matter, there can't be a reopening on the same issue, there can't be a 263 on the same issue. That is the advantage of availing the scheme. One important thing is, your making the declaration does not mean that you are conceding to the tax position of the revenue. So just because you avail the, this is one of the questions that clients also ask us very often. By availing the scheme, is it then meaning to say that the tax authority is right? Is that the import? The scheme itself very clearly says it does not amount to conceding to the position. Then no proceedings shall be instituted in respect of an offence, or no penalty or interest to be levied in respect of the tax arrears settled under the scheme. So this is, apart from your waiver of interest and penalty, you are also given immunity from prosecution. Typically in TDS cases we are seeing, where not only do you have 201, 1A and penalty, you also have prosecutions that are. So what it says is, you will have immunity from prosecution. Then amount paid under the scheme is non-refundable. Let's say you change your mind, you don't want to go for VSV, then it's not refundable. But what is refundable is if any amount is paid in respect of the tax arrears before filing the declaration, and such amount exceeds the amount payable under the scheme, the excess will be refunded but without interest under 244A. So if I have to make say 100% of the tax, and I would have been entitled for waiver of the interest and penalty. But suppose I had made the entire payment of the demand. So the scheme says that if you have made entire payment of the demand, not to worry, you will get a refund of the value of the interest and penalty, but it will be without any interest under 244. Now let's look at the major differences between the 2020 VSV and the 24 VSV. First thing is, the benefit was available to search cases where disputed tax was less than 5 crores. Now, search cases are not eligible at all under the new scheme. So earlier small search cases, perhaps they wanted to give the benefit and say, okay, let it go. Now they have said no benefit for search cases. Then second is applicable to disputes where proceedings were pending in arbitration, conciliation or mediation. This time the scheme doesn't specifically cover anything about matters pending in arbitration. Perhaps my guess is at that point of time the Vodafone issue had just been settled by the Supreme Court and there was an arbitration going on for Vodafone. Perhaps that was the reason why arbitration and mediation and conciliation was included in the 2020. Today there are really no arbitration proceedings pending. So perhaps that's the reason why it doesn't cover arbitrations. Settlement Commission orders or decisions were outside the purview of BSV, which was specifically provided in the scheme of 2020. In the scheme of 2024, there is no specific bar for Settlement Commission matters, but the FAQs that have been released by the security says Settlement Commission matters are not entitled for the scheme. Then another important thing is the earlier scheme specifically dealt with what happens if an enhancement notice is issued by the CITA. How do I compute my tax? So the 2020 scheme said enhancement by CITA before the specified date, which was 31st Jan of 2020, then the disputed tax would have increased to the extent of the proposed enhancement. Now the new scheme, like in the case of Settlement Commission, the new scheme does not talk about enhancement at all. Earlier scheme itself provided about enhancement, new scheme doesn't talk about enhancement. Again, CBDT in its FAQs has said, if there is an enhancement proposal, you take into account the proposed enhancement and then make payment of the tax limits. Possibly could be challenged as being contrary to the scheme because scheme has to provide that. It can't be by way of a clarification by the CBDT, both in the case of Settlement Commission and enhancement issues. Possible, I don't know, depending on clients who are interested to this, possibly explore the possibility of filing a writ petition challenging the FAQs because it doesn't come out from the Act, because any delegated legislation has to find its source of power in the Act, and the Act doesn't provide for it. How could a CBDT FAQ circular have brought in that condition? Something that we can think about. Then the other important point, like I said, was 2020 scheme permitted availing of the scheme where orders had been passed but the time to file an appeal against the order had not lapsed. In this scheme, 2024 scheme, there is nothing in the scheme talking about this, but the FAQs have clearly said it applies only to cases where an appeal was pending as of 22nd July. So it is very clear that to this extent the scheme is very different from the earlier scheme. They are very clear that if an appeal is not pending, although your time limit to file an appeal has not expired, you will not be eligible. But when we are on that note, recently the Delhi High Court, there was a case that came up where the petitioner had challenged this very thing that under the earlier scheme we were entitled to avail the scheme, but now we are not for no obvious reason. Because how can an assessee who has no control of when the order is passed, be put to prejudice because that appeal time, the order has not come in time for me to file an appeal before 22nd July. What Delhi High Court did is basically said CBDT to consider, they gave a direction to the CBDT to consider allowing such assessees also to avail the scheme. This came in recently as recently as 9th December 2024. The FAQs which clarified that they are not eligible was before that. But after this decision, we have not seen any further clarifications coming, and the CBDT has still not provided that these are eligible assessees. So in the earlier 2020 VSC scheme, miscellaneous applications pending as on 31/1 with respect to an appeal dismissed in limine was eligible for VSC. So when we say in limine, when an appeal is dismissed in limine, it is basically when an appellant or the assessee has not been heard. So, and it is an order dismissing for essentially non-prosecution. So let's say the tribunal said, okay, we've given enough notice to the assessee has not come, we dismiss the appeal. And a miscellaneous application is filed to restore the appeal. In those cases, earlier 2020 VSP said that those are eligible. But let's say ITAT has decided the matter on merits, but you want some rectification of errors. Let's say one ground has not been adjudicated, or a ground has been wrongly adjudicated, and you have filed a miscellaneous application. Those kind of miscellaneous applications were not treated as pending appeals, even under the old 2020 scheme. But Bombay High Court basically said that you have to read down the circular to that extent. You can't make a distinction between appeals that were dismissed in limine and miscellaneous applications are pending, or miscellaneous applications are pending for other reasons. You can't make that distinction. Both have to be treated. So as long as a miscellaneous application is pending, you are entitled was the decision under the 2020 scheme. Now, under the 2024 scheme, FAQs are very clear. They have said if a miscellaneous application is pending, that is not as good as an appeal pending, you will not be entitled. So, whether it is in limine or decided on merits, all that is academic discussion under the 2024 scheme. If your appeal is not pending, then you are not entitled. Same with review petitions. Review petition pending in the Supreme Court, there was a decision of the Delhi High Court which said if a review petition is pending, it is as good as an appeal pending, because the decision in the review petition could have gone either ways, could have changed the entire decision. So a review petition pending is considered as an appeal pending was the 2020 decision. So now in the 2024 circular, they made it very clear that review petitions are not appeals pending, they will not be entitled for the scheme. We look at some of the FAQs which have been dealt with in the circulars. I have just chosen a few important ones. Suppose a taxpayer is eligible to apply for the scheme as his appeal is pending as on 22/7/24, but subsequently before the taxpayer could file the declaration under the scheme, his appeal has been disposed of on merits or dismissed as withdrawn for the purposes of the scheme. Can such a taxpayer still file declaration under the scheme? So the question is, it was pending as on 22nd July 24, but subsequently before I filed the declaration, because I had time till 31st of December, so suppose November or something the appeal got disposed, am I entitled to go for the scheme? Initially they had said that you are not entitled, but subsequently they modified and said yes, you are entitled. Yes, such cases are eligible for settlement under the scheme as the appeal was pending as on 22/7/2024. The disputed tax will have to be calculated in the same manner as if the appeal was pending in the as on 22/7/24. So suppose you got relief, some relief in the order now, you can't say now that I got relief, I will pay 50%. That is not allowed. As on 22/7, whatever was your demand is what the circular says. Then, where disputed tax contains qualifying tax arrears along with non-qualifying tax arrears, for instance, tax arrears mentioned in section 96A, where, for example, the tax arrears is in respect of undisclosed foreign assets, whether the taxpayer can apply for the scheme in such case. So, if some portion of your demand arises out of undisclosed foreign assets which you are not an eligible declarant, but there are other issues where you are eligible, what do we do? They say no, you can't, because the scheme envisages one application for an order. You can't split, you can't bifurcate the order. The scheme does not envisage settling issues in part. The dispute has to be settled in full as per the scheme. If there is substantive addition as well as protective addition in the case of an assessee for different assessment year, how will that be covered? Similarly, if there is a substantive addition in case of an assessee and a protective addition on the same issue in the case of another assessee, how will that be covered under the scheme? Basically, they say that one will offset the other. Where substantive as well as protective additions have been made, whether in the case of some taxpayer for different assessment years or in the hands of different taxpayers, then either of the two additions, that is the substantive or protective, can be received if the substantive addition is eligible for settlement under the scheme. On settlement of dispute related to substantive or protective addition, the AO shall pass a rectification order deleting the protective or substantive addition as the case may be, relating to the same issue in the case of the same taxpayer or in the case of another taxpayer. So, if you settle the substantive tax, your protective tax goes. If you settle the protective tax, substantive tax goes. Where assessee settles TDS appeal against an order under 201 as deductor of TDS, will credit of such taxes, will credit of such taxes be allowed to the deductee They say yes, it will be allowed, but it will be the year in which the scheme has been implemented, or where you have made the payment and you have availed the scheme. In that year, the deductee will get the credit of the taxes. Where assessee settles TDS liability as deductor of TDS under BSV against an order under 201, when will he get consequential relief of expenditure allowance under the proviso to 48? Because the year in which you make the payment, you get the benefit under 48, there is a 48 disallowance. They say that it will go back to the year in which the disallowance is made. The deductor shall be entitled to get consequential relief of allowable expenditure under the proviso to 40A in the year in which the tax was required to be deducted. If the disallowance under 40A is with respect to the same issue for which 201 order was passed. However, if the assessee has already claimed deduction of the same amount under 40A in a subsequent year on account of recovery of TDS in the subsequent year, he shall not be entitled to consequential relief in 40A1 on the basis of the settlement under the VSP scheme. So, suppose you had paid off the TDS liability and you are fighting the litigation. You had already claimed that in a year. Then you will not get it once again now because of the scheme. In case in the order under 143.3 there are other issues as well and the appellant wants to settle the dispute with respect to the order under 143.3 of the Act as well, then the disallowance under 40A of the Act relating to the issue on which is already settled the liability under 201 would be ignored for calculating. So if you have 40 and other disallowances, you make payment only to the extent of other disallowances. Your 40A is to be ignored. In such cases where deductee has settled his appeal, whether TDS deductor would be relieved from his liability under 201. Let's say 143.3 assessment on the deductee saying that you ought to have offered this income to tax. He is settling under BSP. What happens to the deductor's case? They say where a deductee has settled his liability, the deductor is relieved from his liability under 201, but interest consequence will continue. With respect to interest under 234A, B and C, there is no appeal, but the SSC has filed waiver applications before the competent authority which is pending. Will such cases be covered under the scheme? They say no, if a waiver application is not an appeal pending, therefore you are not entitled for this. Let's just see this. A taxpayer who has filed a waiver application is not an appellant under section 89(1)A, therefore such cases are not covered. But there is one decision in the case of Tanmayee, Madras High Court, where there was a writ petition that was pending against a rejection. There was an application for waiver which was rejected by the commissioner. Writ petition had been filed. Writ petition was pending. When that writ petition was withdrawn and VSV scheme, the 2020 VSV scheme was availed, Madras High Court says yes, that is allowable. So if you are in a writ petition, you will be entitled. But if you are still at the commissioner's stage where your waiver application is still pending, then this is very basic. A trust has been denied registration at 12AA, can you go under BSV scheme? Obviously no, because there are no tax arrears, no question of disputed demand, no income, nothing. So that's not eligible application. If the CIT has, this is what I was talking when I was talking about enhancement. If the CIT appeals has given an enhancement notice, can the appellant avail the VSV scheme after including the proposed enhanced income in the total assessed income? Yes. When an appeal is pending before the CIT appeals, the disputed tax is the amount that is payable by the appellant if such appeal were to be decided against the appellant. This is as per the definition of disputed tax in section 89. Hence, where the CIT appeals is given an enhancement notice, the taxpayer can avail the scheme after including the proposed enhanced income in the total assessment. Appropriate calculation of the disputed tax is to be made. Addition was made under 143.3 on two issues, whereas appeal was filed only on one addition. What happens? Can I get a waiver for the other issue also? I think that is also quite straightforward. If you have not disputed that other issue, you have accepted that. So obviously your appeal is only on the disputed issue and you can avail the scheme only as far as the disputed issue is concerned. Under DTSP scheme, interest and penalty will be waived only in respect of the issue which is disputed in appeal and for which a declaration is filed. Hence, for the undisputed issue, tax, interest and penalty shall be waived. If a writ petition has been filed against a notice issued under 148, your reassessment notices, and no assessment order has been passed, consequent to that. Whether such cases will be eligible, obvious answer is no. Under in a 148 notice stage, there is no demand that has crystallized. So there is no question of availing the scheme. If appeal is filed before the High Court or the Supreme Court and is pending for admission as on 22nd of July, whether the case is eligible, yes, because once it is filed, it is filed. Fact that it is admitted, not admitted is irrelevant. Whether cross objections are entitled to be covered under the scheme, yes. Even cross objections, suppose the revenue has filed an appeal and you are in cross objections. Are you entitled to avail? Yes, you are entitled to avail. The assessment order under section 143(3) was passed in the case of an SSC for an assessment year. The said assessment order is pending with the ITT. Subsequently, another order under 147 was passed for the same assessment year, and that is pending the CIT. Could both or one of the orders be settled under the scheme? Basically, there are two orders. Answer says if there are two orders, you file two applications. You can't club them both. The appellant in this case has an option to settle either of the two appeals or both the appeals for the same assessment year. As per the rule, the declaration shall be filed separately in respect of each order. Therefore, if a taxpayer decides to settle both the appeals, then he has to file separate declaration for the two orders. So you can't say, I am closing my 147, therefore 143 automatically gets settled. That is not an argument that you can take. Suppose an appeal has been filed before 22nd July with an application for condonation of delay, which is also filed before 22nd July. This appeal has been admitted by allowing the condonation of delay prior to the date of filing the declaration. Whether such taxpayer can opt for the appeal? Yes. In such cases where the appeal as well as the condonation application have been filed on or before 22nd July, on admission of the condonation application, such cases convert into an appeal pending on 22nd July. Therefore, the taxpayer can opt for settlement under the scheme. But the question is, what if you file an appeal after 22nd July 24 with the condonation? Let's say 30 days, 60 days to file an appeal to the tribunal expired somewhere around 15th of July. And you have filed an application, you have filed an appeal along with condonation application, let's say first week of August. Appeal and condonation application are filed after the specified date. Would you be entitled? It will be no. The answer is no. Because the answer that they are giving is if you had filed the appeal and the condonation before 22nd, we will consider that. But if your appeal was not at all filed, then we will not consider. In case of advance pricing agreements and mutual agreement procedures, can the scheme be opted for settling disputes pertaining to non-APA or MAP adjustments? They say the scheme envisages settling the dispute in full. So the scheme does not envisage settling the issues in part. Whatever issues are there in the pending appeal are to be settled, whether or not they pertain to APA and MAP adjustments. Where the prosecution proceedings have not yet been filed before a court of law, whether the SSC is eligible for the scheme, this is what I was explaining. The real initiation of the prosecution happens when a complaint is filed before the magistrate, not when the sanction is issued. So that is what they clarify here. They say yes, reference may be made to section 96 of the DSV scheme. As per the provisions of that section, the scheme shall not apply in respect of tax arrears relating to an assessment year in respect of which prosecution has been instituted on or before the date of filing of declaration. Accordingly, where prosecution proceedings have not yet been filed before a court of law, the taxpayer can opt for the scheme. Where there are two appeals filed for an assessment year in respect of the same order, one by the appellant and one by the tax department, whether the appellant can opt for only one of the appeals, how would the disputed tax be computed in such cases? Yes, the appellant has an option to opt for settling the appeal filed by him or filed by the department or both. This has to be specified in the declaration in Form 1. In terms of the DTSV rules, single form can be filed by the appellant in such cases and the disputed tax would be worked out accordingly. So if you choose to resolve the departmental appeal, you work out the disputed tax 50% as provided in this. If you want to close your appeal, then you pay 100% of the tax and close that appeal. If you want to do both, you can file one form and close that also. An order has been set aside fully or partially to the AO. This is important. Can the taxpayer avail the scheme if the set aside matter is pending as on 22nd July 2024? I'll read the second question also in the same page. Both are connected. appeal has been set aside to the ITAT, CITA or DRP and was pending as on 22nd of July. Whether in such cases the SSE can opt for the scheme. So basically, if the matter has been set aside to the AO and it is pending before the AO as on the specified date, am I entitled? If the matter has been sent back to an appellate authority and it is pending as on 22nd July, am I entitled? In the first case, you are not entitled because there is no appeal pending. In the second case, an appeal is pending because it is sent back to an appellate authority and therefore you will be entitled. So according to the scheme, an appeal which is pending as on 22nd July shall be eligible for settlement. A set-aside matter to the AO is not an appeal pending as such. Therefore, set-aside matters to the AO, whether fully set-aside or partially set-aside, are not covered under the scheme. Where an appeal has been set aside fully to the ITAT or CIT appeals, such appeals will be eligible for settlement. Also, where an appeal has been partially set aside to the ITAT or CIT appeals, all the issues which have been set aside will form a separate appeal and shall be eligible for settlement as such, and the disputed tax will be computed as if pending at the level which is to which it is set aside. So, let's say on certain issues ITAT has given you relief, sent it back on certain other issues. They will compute the disputed tax as if the appeal is pending only on those issues that were remanded. That is how. The extant provisions of the scheme does not cover cases where taxpayer would have received orders but the time limit to file an appeal has not expired. Is there any possibility that such cases can be covered in the scheme? This is what I was saying is the major difference between the 2020 scheme. They say no, appeal to be pending as on 22/7/24. Scheme does not provide for eligibility of those cases where an appeal is not pending as on 22/7. This also we discussed briefly when we are talking about matters that are not eligible, where the information has been received under an agreement referred to in section 90 or 90A. However, such information has not been used for making additions in the assessment or reassessment order. In such cases, whether the assessor will be entitled to opt for the scheme. They say yes, 96 of the scheme clearly states that the scheme shall not apply where tax arrears relate to assessment or reassessment made on the basis of information received under 90. Accordingly, where information received under section 90 or 90A has not been used for making additions in the assessment or reassessment, assessees can opt for the scheme for such orders. If the taxpayer avails the scheme of 24 for transfer pricing adjustment with the provisions of section 92C of the Act separately apply. 92C is basically secondary adjustments. They say yes, it will be applicable. But anyway, secondary adjustments apply only in the case after 1670, after assessment year 1670 onwards. Prior to 1670, they don't apply. Yes, secondary adjustment under 92C will be applicable. However, it may be noted that the provision of secondary adjustment as contained in 92C is not applicable for primary adjustments made in respect of an assessment year commencing on or before 2460. That means if there is any primary adjustment for assessment year 1670 or earlier assessment year, it is not subjected to secondary adjustment. Then we look at some litigations that have happened in the earlier VSV and the current VSV. It's a little bit of an irony that VSV was for cutting down litigation, but there is litigation around VSV itself. But interesting cases, VSV can be availed in cases where the prosecution is unrelated to the tax arrears. So this is what we were discussing when we were discussing about how the language is worded. It says in respect of an assessment year for which there is a prosecution. So if you were to just literally interpret that, it means if for an assessment year there is prosecution pending on any uncollected issue also, you would not be entitled for the VSP scheme. But the Bombay High Court in Macrotech under the earlier 2020 scheme said that if that prosecution is unrelated to your tax arrears, then you can't obviously see that as a bar, and that has been upheld by the Supreme Court. So now we can take it that if it is an unrelated prosecution, you will be entitled. Then delayed payment of refund interest is to be granted. So under the old VST as well as the new scheme, new VST, there are really no timelines for giving the refund. Like we saw that if I have paid in excess of the 100% tax, I will be entitled for the refund as per the scheme. But there are really no timelines provided. So this is a typical problem that we are seeing with our clients here also. They avail the scheme in the hope that they can get refunds, but the refunds don't ever come. So you approach the writ court, and this is one of those cases where they say you have to grant interest on the refund because it is your promise that you would refund it. So you can't sit on that money and not pay interest. So this is an unfortunate litigation because BSV is not, I mean the entire object of BSV is defeated. Then this is also, serial number 3 is also unfortunate. Pursuant to settlement of dispute under BSV, proceedings under 263 cannot be initiated on the same issue because our section 92 very clearly says all those issues are sorted forever. There will be no reassessment, no revision, nothing, those can't be re-agitated. But we still saw some cases where 263s were initiated on the very same issues. Courts have stepped in and said, you can't do that. Actually, I think in one of these cases, the 263 was already initiated at the time when the 143.3 was closed under VSV. Even in such a case, they said even before filing the VSV application, there was a 263 pending. But the courts have said, no, once you close the 143.3 order, that order itself goes. So what is it that you are doing in 263 trying to revise? Where is the order for you to revise? Then there is also 2024 VSV has also seen some litigation. What has happened in this unfortunate case before the Telangana High Court was that the Form 2 was issued, the assessee did not have the money to make the payment. So the VSV scheme fell through. So they wanted to revive the appeal before the tribunal and the tribunal rejected that request. So the assessee filed a writ petition. Court said once the VSV application did not go through, obviously the appeal will have to be revived. So this is one recent case. Then this is the other matter that I was talking about. Writ petition was filed challenging the validity of the definition of appellant in 89, which is confined to cases where appeal is pending as of 22nd July. It does not give the benefit to orders passed but appeal period not expired. That's the case where the Delhi High Court said CBDT, you consider whether those cases can also be included in the definition of appellants. Then lastly, we'll just look at what our experience has been with the 2020 scheme, what is really our expectation. One is we've seen a lot of delayed refunds. Like I was telling you, although the scheme provides for refunds, there's really no time limit provided. So we've seen a lot of litigation around trying to get those refunds. So perhaps the scheme could have come out with time limits for that. And so there is no time limit for issuing the Form 4 also. There is a time limit to issue Form 2, which is the intimation to make the payment has to come within 15 days of your filing the declaration, and thereafter I have 15 days to make the payment. But thereafter there is no time limit for the authority to issue Form 4 and say everything is concluded. So perhaps probably too late today to say that some circular could have come out giving time limits. Then we are seeing again, because of delayed refunds, again the revenue is having to cough up interest on the refunds. Then subsequent revisions under 263, which is what we discussed when we were discussing the judicial precedents, because 92 very clearly says that you can't re-agitate those issues. So perhaps some implementation regimes around how VSV has to be implemented can solve the problem. Then prosecution unrelated to tax arrears, that we saw those judicial precedents which have now settled the issue. And remedy if VSV does not go through, that also we saw now that those decisions have very clearly said that if VSV ultimately doesn't go through, your appeal has to stand revived. This is it. So although it's a 2-hour session, I think there is nothing much that we can really discuss about this topic. If anybody has any questions, I'm glad to answer.
The thing is that declaration has to be filed before 31st, or payment also has to be filed before 31st?
Declaration has to, see, the payment comes after declaration because he has to quantify the payment. So your declarations have to go before 31st, and thereafter you get 15 days. He issues the intimation within 15 days, and then you get another 15 days.
So one more question. There are some cases related to ESIP have been decided by the ITAP in favor of the assessees before the Supreme Court judgment. Now after the Supreme Court judgment, because these orders have not been given effect by the assessing authority, they are telling that they will go for an appeal. such appeal also can be go for this because they have not still they have not gone. Whether they have a right to go for that such kind of orders.
So, see, I mean, there again it becomes a dicey issue. Your appeal should have been pending as on 22nd July. That becomes a problem because from what you tell me, perhaps the appeal was already disposed of prior to 22nd of July. If your appeal had been pending as of 27th July, you can still take a chance, but that will be considered as an assessee's appeal pending. So you have to pay 100% tax and close it. But if there was no appeal pending as of 22nd July, it was already disposed of, then we are in a dicey situation. There,
the ITAT has already passed an order in favor of the assessee. So the department can go for revision petition under the ITAT.
see, so they have 6 months time to file.
Only 6 months time. No, even 6 months is elapsed. But
So they may file a further appeal to the High Court.
if it's a small amount.
If it is, I mean, again, tax effect, you will have to see.
So in such a case, they have to give effect to the revision that ITAT order.
See, they have to, but one thing we'll have to remember is they may give order giving effect to 254 and they may do a 154 to that. They may do a rectification. Because there are those kind of decisions that say that a subsequent Supreme Court decision is good enough reason to do a 154. So that is something that we'll have to be mindful of.
Is the 15 days for making the payment elapsed, whether he can reapply before 31st of January?
Yeah, I would think so. There is no bar really on reapplying. But we'll have to see if the portal allows it, because I don't know if it's we'll have to go and see whether that's really a procedural thing we'll have to check on. But I would think, at least from a bare reading of the scheme, I wouldn't think that that is an impossible task. Or perhaps you could also make the payment and say that, this sort of make a letter saying that condone the delay in making the payment and kindly issue form 4. That may be a better approach.
In my client's case, you file an appeal for some X amount, then the CIT has allowed 70% of the amount, and the 30% he asked the subordinate officer recompute the tax. So we are actually uncertain what is the tax amount.
When did the order come?
Around 3-4 months back.
No. So as on 22nd July 24 was what was the situation? Was your appeal pending before the Commissioner appeals?
Yes, partly allowed the amount.
That was before 22nd.
Before that, assuming before that.
See, there are two things. If the appeal order came before 22nd July 24, then your appeal is not pending as on 22nd July. So you are not entitled for the scheme at all.
Okay.
If the appeal order came after 22nd July 24, then you take the demand as it stood when your appeal was pending. So your demand as per the original assessment order gives time.
But yes, they allowed us 70%. And
The
30%,
subsequent allowance will make no difference.
then we have to pay more.
Yeah.
But he has already allowed, given us the benefit of 70%.
So don't avail the PSBC.
Because we are uncertain about that, what is the 30%.
So this is the problem with this new scheme where, the 22nd cutoff, they have provided without providing the benefit to assess, including assessees where you could have filed an appeal. The time limit to file an appeal would not have elapsed is not there in this scheme. That's the problem. Under the earlier scheme, you would have been entitled to take benefit and you could have made payment on that 30% and taken the benefit. In this new scheme, that is a challenge.
So after filing the declaration by the assessee, the department has to quantify within 15 days. Suppose the department delays 15 days.
So practically, even though they are delaying because assessees are interested to close their matters, they are taking it as and when it comes. But I don't know, practically I don't think it is going much beyond 15, I mean maybe here and there 10 days this side, that side. Strictly speaking, you can challenge it, saying it has not been issued within the time. But where will it take you? You go back to not getting a decision.
If an issue is held against the assessee in the Supreme Court, say MFN matter, on the same matter, some other year I have an appeal pending before, say CIT appeals or tribunal, can I still go for BSP?
You can go, but you have to. Basically, the issue is decided against you. You can't take the benefit of the 50% waiver. So you will have to pay 100% tax and get
Waiver of
interest. Yeah, typically we are seeing cases of PF, ESI checkmate and MFN clause Nestle. Those cases are going for BSc. That is what we are typically seeing.
And this loss reduction, suppose I choose the option of carrying forward the reduced losses in the subsequent year. When will I have to pay the taxes? So year in which it has been set off. So before agreeing for VSP and issue of Form 3 or 4, will they insist on paying taxes for 2 years?
No. So because there is an option, and the scheme also very clearly provides that in the subsequent year when you decompute the losses, you will have to compute the tax as things stand in those years. So at this point of time you don't have to do anything, because in those years your appeals may be pending, they may be at various stages. So at this point in time you may not be able to compute in the subsequent years, and that's not a requirement. Any other questions? Thanks everyone, and Happy New Year once again to all of you.
Thank you, Tanmayee. That was like really required session now, and thank you for taking your time out and then sharing your knowledge and clarifying all the doubts of our members. On behalf of Bengaluru branch, we thank you. We have a small memento. I request our Chairman Pramod to hand over the memento to Tanmayee. A round of applause. Members, again, wish you Happy New Year. Thank you for turning out this number today, despite the celebrations. See you next week with the next subject. See you all. Thank you. Good night. Yeah, there is.